Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Style is the bomb, daddy bomb.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so small.
So crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet.
It's Mr. Daily Profiler Statmans.
All right, good morning. How's everybody doing today? I see Coast 369. Good morning, Shag Nasty. Good morning, Pocket. Good morning, Matrix Burns. Good morning, Staying in the House. Good morning. Yeah, let's get it. Austin, you on?
I'm here for a little time, but not a long time.
Listen, Austin is living his Hallmark movie Christmas special right now. He's in New York City doing all the touristy stuff, drinking peppermint latte, chai, whatever crap from Starbucks. Got the hoodie on, got the
With
scarf
extra
on.
caramel.
Yeah, with extra caramel, right? He's at the Rockefeller Center ice skating, doing all the touristy stuff. I'm telling you, living a Hallmark movie.
There's this
I'm excited.
weird soundtrack playing everywhere we go. I don't know where it's coming from.
Is it Mariah Carey?
I think so. I think that's it.
Guarantee it's Mariah Carey. Yeah, so I'm excited to see what comes out of this trip 9 months from now. Like I'm really got my fingers crossed, hoping, All right. So you want to do your war game analysis? This won't be a long stream. I think we're all just excited to move on in the year. We wanted to do one last live stream, one last 9:30, to kind of like close out the year so we can come back in January and just crush it. So you want to start with what you see, Austin? Mr. Furu trading from your phone.
Oh shoot, I'll give you let's do this is a new segment on the live trade session called the Guru Alerts. Okay, because all I have is a cell phone. I hope that you can still hear me.
Yeah, we can hear you just fine.
You can still hear? Okay, cool. Because I'm on. Okay, cool. So let's see here. This is the first. I'm literally opening up my chart right now. So if I had to give you a super quick rundown, we have an instat low of day at 1800, 825 high of day, and we have a lot of statistics below here. So at first glance, if I don't know the daily profiler variables and stuff like that in front of me.
I'll cover that.
But okay, cool. So we have a lot of stuff below us. So I'd be looking at this is a clean signature for how we broke through the P12 high. We retested it, I think, in the pre-market here around 755 to 8, and we're just launching off of it. So if we went long in New York 1, I would be really paying attention to see if market open is the solidified pivot off of the high of day. And then we just have a really nice firecracker. But where it's moving into the holidays, very low, volume volatility, whatever the heck you want to call it. Like it's just kind of like this is pure experience. Anytime we have these holidays, dude, it's just like a drift. You know what I mean? So I'd be looking to see if we get above 930 and get above market open. Maybe just a classic true day,
Yeah,
But that's all I see today.
Absolutely. So I'll go in and start it off from the daily chart to give you guys a little bit more review. Friday, 6 settlement. We knew that there was an 81% probability that we'd take out previous day high. Sorry. There was a 27% probability that we'd take out previous day low. And it's based off of what Thursday and Friday did, right? Now we're above previous month 50%, below NFP Friday. So we know there's no statistical edge of red candle versus green candle for the day. So we gapped up, and we know that Sundays 1800 loves putting the low or the high of the day in, and we'll get into that once I get on the other chart to show that. But we know we took out previous day high, right? We jumped above it, right? And we know from a candle science perspective, right? we know that there's an 81%, we took it out, right? And then looking at how far based off of 709 days, meaning this signature right here, what Thursday and Friday did to include the open, high, low, close patterns, that's happened 709 other days before, right? And out of that 709 days, right, this yellow line representing previous day high, we know that the 30th percentile reversal zone is around 0.25, all right? Meaning 30% of the time out of this 709 days, 30% of that reversed before making it to 0.25. Well, we know this not to be true because we're above that now. So we know that we are not within the 30th percentile. Now we're going to look at the 50th, right? So the reversal of the 50th, which is the median right here, 0.43. We know that 50% of that 709 days has reversed by then. Well, it's pretty cool because we've already passed that, right? So now we're going to go up to the 70th percentile zone, right? Which is the top of this red box. So the 30th is the beginning of the green. The 50th is where the green and the red meets. And then the 70th percentile, right, is at 0.72, meaning 70% of the 709 data points have reversed before hitting 0.72, right? And so we know anything above this is anomaly, and we're on the other side of the 30% of a percentile, right? So anomaly land, right? So looking at how we expect to close today, right? This is one of the most bullish probability closes that you're going to get, right? Based off this sequence that we did. We know that 54% of the time, this is the only one where we have a higher probability of closing above the high than below the high, right? So we know we have 54% probability of closing above previous day high. We know we have a 94% of closing above the low. Well, that's kind of common sense. We have a 64% probability of closing above Friday's settlement, right? So we can come throughout the day, come back to it, right? Come back and do RTH gap fill, all that stuff. But there's a 64% probability that we'll close above that close price, right? And then there's obviously a 90 percentile of, you know, the open, right? Of us closing above the open. So that's with that. All right. So we're anticipating higher prices, but if we break out to the long side, which we'll get into this, we're going to expect a long false. We break out to the short side, we know that there's a higher likelihood to close above this high for New York 1. But before we get into that, let's go into our weekly view and look at our weekly probabilities. We know that this 86% probability coming off of this weekly level right here has been hit, right, for the week. So that one's now gone. Right now we have the 1% off of that weekly level, which is a 78% probability. So now we've got an area that we can possibly go up to before reversing the day, right? We know that we're above Sunday's 18 to 1930 range, right? And we've already taken out previous week high, right? So it looks like the Grinch was not able to successfully do his thing this Christmas. However, he didn't steal Christmas until Christmas Eve. So there's always a slim possibility. And it looks like the Santa rally is happening, right? All right. So these are some of the levels that Austin was talking about. I'm going to turn those off because I don't necessarily need them right now. So we see that Asia, the Tokyo markets bidded up the market and the London markets bidded up the market. So like now we looked at candle signs, which is the probabilities for any time frame, open, high, low, close, any asset, right? Now we're going to move over and we looked at it from a daily perspective. Now we're going to go look at the probabilities based off of what Tokyo did and based off of what London and Frankfurt did. What is the probability of, you know, New York 1, right? And let's see. All right. So we can see that, right, if we put in the variables that Asia and London did, right, we can see that we left two major levels open. We left the London OU open, which is the midpoint of this time-based range, and we left Asia OU open, which is the midpoint of this time-based range, right? And so now we can put probabilities on those to see what the likelihood of them getting hit. Well, we can see that Asia one has a 75% probability of getting hit as it stands, right? And the mode for that happens at 9:30 to 9:45. So that's a pretty big breadcrumb. we see that London, and that's this level right here, where it says ASNOU, right? So we're going to be paying attention to that level, right? London OU, which is right here, it says LDN OU, we know has an 87% probability of getting hit, right? And the mode happening from 7:30 to 7:45, and the median, which we're currently on, 8:30 to 8:45. But then the next highest probable time of hitting it is between 9:30 and 9:45. All right. So we know that these two levels are going to be very dominant. I want to see what other levels out there matter today without whichever way we break out of the 7:30 to 8:30, right? So I'm going to come over to the levels. And I see that we hit that P12 high exactly how we should have. That's the previous 12-hour high. So 1800 to 06, this is the highest point, right? It happened at 435, 440, I mean, right? So we knew that the higher probability of us hitting that, it had an 87% probability. And we can see that it was supposed to happen between 6 and we'll say 7. The mode to median is from 6 to 7:30, and we did that, right? So the sequence was to go up and hit the P12 high, and now we're trying to solve for this problem, right? Which is our probability of hitting that P12 mid? Well, there's an 80% probability, but the next possible mode is 9:30 to 9:45. If we can't hit this P12 mid, the 50% of the 12-hour, then that's telling us that momentum is strong, right? And we don't need to fight it, right? So, right, that's telling us that. Right, so these are the 3 levels that we're going to watch. Right now, I want to go look at what the statistics tell me about the current high of the day that we have. Now we know that we use the 7:30 to 8:30 to pull data from, and this is the high and this is the low, and there's 4 possible scenarios that can play because we haven't broke out. Right, so let's draw them out. We can break higher first, right, and then we hit the other side of this. Right, we can break higher by 11:30. And we can't hit the other side this low by 11:30. Or we can break lower and then hit the other side of this 7:30 to 8:30 by 11:30. Or we break low and we don't, right? So those are the kind of the 4 possible outcomes that we can do around the 7:30 to 8:30 box that we measure, right? So now I want to look at the variance, as in true versus false. Are we on a streak, right? And right now, let me set this up, S3. We can see that we are on out of the last 74 days, so out of the last quarters, we went false, meaning we broke out one side and hit the other side of that range 62% of the time. We've stayed true 37% of the time, so we broke one way, and we could not make it to the other side of the range, whether it's long or short, 37% of the time. We can see that the max streak for a true is 4 days out of the last quarter, and we're on day number 4 right now. So whichever way we break out, we're going to be very hesitant to keep trading that direction, because we know not only are we expecting to break to the other side of this time-based range, the 7:30 to 8:30, but we also know from a variance standpoint, we're on the high end of a true streak, right? So that's kind of showing its hand right now. So now we're going to war game. I want to say, hey, out of those 4 possibilities, right, which it looks like we might be going long right now, right, which ones support the current low of the day? Well, we can see that the long true does from a time and a price standpoint. We can see the long false supports it from a time and price standpoint. We can see the short true does not support that low of the day. And we can see that the short false supports that low of the day. So there's, out of 4 possible scenarios of what we can do, we can see that 3 of the 4 supports that low of the day. Now we can do the same thing with the high of the day, the 825 high of the day, right? We see that there's no data that supports that high of the day for a long true. There's no data that supports, there's a 4% of data supports that current high. No, there's no data because it was at 825. So we know that high of the day, same thing with here, right? We have absolutely no data between 825 and 830 that supports that high of the day whatsoever, period. So all 4 scenarios don't support that high of the day. So now we get a pretty big breadcrumb. This low of the day can be supported unless we just sell off and the Grinch steps in and still staying like Christmas, right? But this high of the day is definitely not supported, right? So now, if we break to the downside, we expect us to net off of one of these key high probability levels and then continue taking it on up. Or, right, we break to the upside to come back down, right? And then we'll play the high of the day. Before we do that, I want to go look at the RTH gap data, right? For a Monday, since we haven't broken out of that, like there's no sense rushing to failure. I'd like it when the market gives me, instead of 4 possible outcomes, 2 possible outcomes before I start building my business plan. Right, so we can see that on the day, based off of what Asia and London did, these midnight open has the highest probability out of Globex open settlement and midnight. Midnight has the highest probability of retracement, and that mode is between 9:30 and 10:30. If we come and look at settlement on a Monday, we can see that it still has a low 64% probability of the time, right? We can see that the 25% of the RTH gets hit 80% of the time on a Monday, based off what Asia and London did. We can see that 50% of the time is 75%. 75% of the time gets hit 69% of the time. 100% gets hit 64. So there are higher hit rates for, like, if I was going to be using these as levels, like I think the 50% of the RTH gap is a good target to shoot for, right? Because I guarantee that currently sinks in. Let's see where midnight is. Globex settlement midnight, right? Let's get them populated on the screen. And would you look at that? Midnight open lines up with P12 mid. Globex open lines up with this, and then settlement is all the way down here, right? So we know that this whole return to settlement can happen, right? But it's a lower probability right now. Now let's look at our distros, right? Right? The 10-day median range has moved 383 handles, right? And we've only spent about not even half of that yet. Right? And then looking to see if volatility is contracting or expanding. Volatility is a fancy word of saying range, right? Measured range, right? And what we do is we like to look at the 10-day median range and then the quarter distros, right? To see if volatility is still expanding overnight or contracting. And what we can see is out of all the Mondays in the quarter, we've typically moved 53 basis points or 129 handles. Last night, we only moved 31 basis points. So that indicates that volatility is contracting. The range is small, right? London, out of the last quarter, has spent 41 basis points or 105 handles, right? London underspent by a lot. It only did 19 or 50 handles. So we know that volatility is contracting, meaning the ranges are getting smaller. So we do not expect New York 1 to overspend. And we can see that we can expect a good 197 or 76 basis points out of New York 1, which would put us here, or we're going to go. Now we're going to go do the high of the day, right? So we can see what a realistic high of the day is. And since we're breaking out to the long side, we're going to go do that now. So now we can see if we break out to the long side, right? Whether we go long, we can see that majority of the time, 58% of the time, it goes false. 41% of the time, it goes true, right? So that's a pretty big clue that there's a possibility of a true today. Right, so let's start with false. If we go false, we can see that that low of the day gets supported. Is supported. Long true definitely supports it, but long false supports it as well, right? But from a high of the day standpoint, for a long false, we can see that it's either going to come at 9:30 to 9:45, or it's going to come at end of day, right? And we can see that a good mode to median for the high of the day is from 0.8 to 1.1%. Right, so we're going to go put a high of the day on our chart. Let me hide this real quick. We're going to go long false, and we can see, let me go back and see what I even said. 0.8 to 1.1. I think we're at 0.8 right now. And we're going to put 930 to 1600 to represent like the possibility of those two modes getting hit, right? Well, we can see, I love it when maths, right? That quarterly data that we use to measure 1130 to, or 730 to 1130 matches up with the top of the high of the day zone, right? And this is 840. That's a lot higher than what candle science gave us for distribution up, right? So we know that this is the high of the day zone for the long fall scenario. We're going to pay very close attention to how 930 opens up, right? Do we have to dig all the way into it, or are we going to reverse lower? I mean, lower before we get there, right? And then do something like this to, you know, come back and get some of these high probability zones, right? And then end the day higher up in this box, right? All right. So one thing I want to go over for the new users, right? Let's go look at the long true scenario real quick. Right, we can see that the long true scenario for New York 1, right, has the long true has higher probability of making end of day. We know that the long true is the least likely, but it still has enough to be likely, right? But we're going to expect for a long true, and we can see for its high of the day, it's 1.4 to 1.8. For its low of the day, it definitely met the same criteria as our low of the day, right? So how do we determine, right? And how do we determine if we're going to get a long true or a long false? Well, data shows us that if we get a long true, we're going to just trend up, range from 10 to 1030, and then range from 10 to 1130. So a DWP style price movement, right? For a long false, we can see that we'll make a new high and then pivot low, and then range from 10 to 11 o'clock, right? So DWP to the downside. So one thing that we do is the 4-step reversal, right? Because probabilities are cool and all if you understand how to line them up with live price, right? Probabilities without the ability to read a market is useless, right? So this is going to represent our 9 o'clock candle, right? And we know that we don't like buying or we don't like fading reversals. And right now we have the week momentum up, the daily momentum's up, the 12-hour momentum's up, the 4-hour momentum's up, the 3-hour momentum's up, the 2-hour, the 1 hour, the 30, et cetera, right? So in order to make sure that we don't fade momentum and just keep getting stabbed with selling momentum up, right? We have a systematic framework of doing that, right? So we have this will represent the 9 o'clock hour. This will represent the midpoint of the 9 o'clock hour. This will represent the high. This will represent the low, right? This next box will represent the 930 price. And we do this in 4 steps, right? Right? So in order to make sure that if we get into a zone or something like that, that we want to sell, we don't, the problem that I've seen with a lot of reverse, to include myself, and with a lot of data to back it up, that a lot of people try to use trend position size in their risk profile for a reversal, and that's not what we're going to do. So we built this 4-step reversal to make sure that we have checkpoints that of things that are going to be there every single day to kind of see if that, you know, 4-step reversal is going to come in, right? The first step, and they don't have to happen in this order, is can we get below 930? So as price opens up, 930 comes up, and then like, can we get below 930? That'd be step 1. And if my typical position size was 2.25% risk, I'd put a fourth of that on right here. And then step 2, 9 o'clock 50. Can we get below 9 o'clock 50? And I'd find an area to add another fourth of that 2.25% risk per trade right there. Step 3, can 10 o'clock take out 9 o'clock's low, right? And then can, and this will be a 05 box, right? Can we put an instant high at 10 o'clock, right? We know that data has shown us that 10 o'clock likes to put the higher the low of the hour in between 10 and 10:15, and then in the first quarter of the hour, and then the last quarter of the hour is when it likes to do the other extreme. So can we do an instant high from 10 to 10:15? And once we have all four of those steps, we know that we can leech off this major pivot for the rest of the 3 hours, the rest of the day, whatever, right? But we're not going to sit here and try to sell every single rip because we know momentum is up. So we're forcing the market to show us that, yeah, we get it. Probabilities say we should be reversing. But until the market says that it gives a shit about reversing, we're not going to fade momentum. And that's how we do that. But yeah, like that. So my game plan today, my trade plan is if 9:30 gives me a buy, guess what? I'll buy and I'll manage that position. The same way I do every 9:30. And if you go through the boot camp, you know how I do that, right? Um, if we get a sell, I'll sell with a little bit less, right? But then I'll be more prone to add to winning positions around that '05 breakout, right? And I'll target levels like London OU, midnight, or even Asia OU, depending on how strong momentum reverses on us, right? So longs definitely get the bid, but I'm definitely cautious that we're approaching levels that statistically are anomalies, right? To the upside. So I'm definitely aware of that reversal, and that's how I'm going to deal with that reversal.
Yo, Mick, can you hear me?
Yeah, I got you, bud.
Yeah, I think 9:45. I think today is a really good day of just an example of that 9:45 to 10, that 15-minute chunk of time right here.
Hmm.
And I guess if any watching, if I give anybody value today, it's that these type of days like this where we're super overextended with all statistics below. We have every level low. These are the days that I always like to remind people. This is what when you understand the weakness of your edge because you keep doing the same thing for so many trade sessions, whatever you want to call it. This is when you recognize what you're weak and you turn that weakness into a strength. So before this was when I was looking for, these retracements and I was failing to align it properly with live price. And I would just get my face ripped off, because we're consistently like live price is saying, hey man, cool spreadsheets, bro, but you may have 60, 70, 80%, but this is a day that we're not going to experience any of that. And so one thing that I found so valuable when Mickey and I kind of came together and I learned from Mickey's perspective of using the daily profiler, one of the biggest little key pieces of nuggets or gems or whatever you want to call it is from 9:45 to about 10:15. Now I say that range because it differs between what Asia and London did. Sometimes it's a little bit shorter, sometimes it's a little bit longer. But either way, when we fell to even like in this point here, when we're having like statistics like P12 mid and midnight open stacked right on top of each other, we have London OU below, we have Asia OU below, we have all these levels that statistically we're going to hit long term more than we don't. Even though those are stacked like that, if 9:30 is just not giving you any type of sell, you structure for the minority. That's all I see
Absolutely. I have
today.
an old saying that I picked up from a really good friend of mine when I was working investment banking, right? Like he said, when the ducks are quacking, you feed them.
Yep.
And until they walk away, then you bonk them upside the head with a hammer, right? And the moral of the story is when momentum is going, you just continue feeding it. You continue feeding it because it will be obvious. It'll be obvious whether you're an ICT based trader, whether you're supporting resistance. You all know what momentum looks like, right? You all know, like, not to chase trades. You all know, right? Like, let's look at this, right? It becomes pretty obvious that 9:30 to 10 o'clock gives you the reversals, right? Um, like I did a great little video last week on the YouTube to show you the probabilities of that from a 12-hour, from a 3-hour to high day, lower day. Like setting frameworks to not fade momentum, and then if then statements have to happen, right? So we have a couple of traders that like use this MA to MFE, right? So we know that out of the last year on a Monday, right? Like 50% of the time we either come up here to make distribution down or we come down to make distribution up, right? And we can see that we use
Speaking of one of those, we look at that. We got them tuning in from the Dominican Republic, baby.
Drez.
What's up, Drez?
Anyway, we can see that like data doesn't lie, right? Like data says we like to come up to this level before making the reversal for the 12-hour cycle between 06 and 1730, right? And we like to do that the most from 06 to 1730, from 9:30 to 10 o'clock, all right? Like, yeah, we have these little anomalies here and here and here and here, but when you're building a business plan, these red ones represent moving up before you move down or moving down before you move up. When you're building a business plan for any kind of company and you look at your data, right, the thing that's going to catch your eye every time, whether it's trading, real estate, cosmetology, anything, you're going to notice these moves right here, right? And then you're going to look left and be like, oh, this is a bell-shaped curve right here. So this is the area that I want to build my business plan around. And then how do my sales look? Well, it looks like 1345 to 1600. So like the bell-shaped curve, right? So, right, whichever way you do it, right, you need to build your business plan. We know that, damn it. There we go. We know that 9:30 to 10:30 over 20 years without any data, 31% of the time places the high of the day, low of day, right? We know that over 20 years, 61% of the time, it makes the high of the major pivot for the next 3 hours or the low major pivot for the next 3 hours. 58% of the time from a 12-hour approach, 06 to 1730, it does it 58% of the time. So 31, 58, 61, 58, 61. Yeah. So we know that like this is a really dominant time for us to put the reversal. But the problem is, number one, right, you're fighting momentum, right? So now we need to structure our risk in a way where we're not just take a sell, get stopped out, take a sell, get stopped out, take a sell, get stopped out. And we don't want to fight momentum because, like I showed you, like 39% of the time or whatever it was, let's go look. 41% of the time, based off of what Asia and London did, we go true, meaning we don't reverse, right? So you have to have those live price if-then statements to tell you, are we going to reverse? Because we know there's a high likelihood of us reversing. But then you also need to pay attention to what about the 41% of the times based off of what Asia and London did, based off of candle science, but we don't reverse. And how can I turn systems on and turn them off based off of that if-then statement? And we've got 12 minutes. So let me check the chat because I'm horrible about checking the chat on YouTube at least. Okay, people are speaking Spanish and I have no idea what they're saying.
That's John Walker, man. What up, John Walker?
Oh man, he's a good one, dude. He was one of the top 10% in the boot camp this last class, man. Like he put the work in. All right, so yeah, bark 3 times if you're in San Francisco. All right, so we do have a new boot camp class coming up in January 17th, right? And a little bit about the boot camp. All right, it's 3 months, right? And I've broken it down into 3 phases, right? And you can think of it as the education phase, the testing phase, and the compounding phase. You can think of it, but basically what we do is the first phase, right? We teach you the live price components, right? How to read a live market, right? Like what, and the cool thing is we do it statistically, right? How do we read a live market? Because the market ultimately gets to tell you what it's going to do. Is it going to go for the 70% or is it going to go for the 30%? Is it going to go for the 90% or is it going to go for the 10%? Right? That's kind of what we were talking about with the 4-step reversal. And then we teach you how to read data. And I know stats is one of those hated subjects in school. Well, luckily, you've got an infantryman who actually has a degree in statistics. So I know how to make hard things understandable in the most simplest fashion, right? So I teach it very, very simple and understandable, right? But we teach you how to align the two, historical data and the live price component, right? And that's phase 1, right? Phase 2 is about, how to build a risk profile, because I believe there's 3 layers to this game that each trader has to solve. And if you don't solve all 3, one of them is going to constantly destroy you over time, right? Layer 1, right? All right, I see Mickey and some Spanish. I swear if you guys are talking shit in some other language, I'm going to come over there and I'm going to drink margaritas with you and then I'm going to kill you. I'm just kidding. And we got kicked off YouTube. I'm just kidding. All right, so those 3 layers that every trader has to figure out, right? First and foremost, the market. The market can move 25,000 possible wiggles, like 25,000 possible wiggles, right? So let me give you an example what a Monte Carlos is. This is for risk profiling, and this is just 1,000, right? Let me make sure. Yeah, this is just 1,000. 1,000 possible up, downs, higher lows, low highs, whatever, right? The NASDAQ between 930 and 1,600 can do 20,000, 25,000 inversions of these, right? So your job is to find measured moves, right? Fixed constants, things that make you a proactive trader, not a reactive trader. Remember, like patterns are reactive. Patterns make you a reactive trader, right? Because they don't happen the same time every day, right? We use fixed constants. So we, at the same time every single day, regardless of the hour, we know what to make decisions around. We can build playbooks. We can build yes and no scenarios. You got to do it the most linear process. Yes, am I right or am I wrong? Right. So that's how we kind of, and that repeatable workflow is how we solve for layer number 1 of the market. Layer number 2 is you're trading futures. Layer number 2 is probably the most important. This is what we teach in phase 2, right? What risk profile and position size and risk per trade can I use in a highly leveraged market, right? Because you guys have been conditioned to think it's not highly leveraged because of prop accounts and prop worlds and stuff like that. But in reality, it's a very high leveraged product, right? I was talking with an 83-year-old gentleman over a Christmas party over the weekend, and he's been trading for about 60 years. He's a big time trader, trades account sizes way bigger than we could ever fathom, right? And when I told him I was a future trader and showing him some of our stuff, he was like, "You must have balls of steel." And I was like, "Why is that?" Because of the leverage. Everybody understands that we're in a high leverage environment. So we need to build a risk profile and understand the numbers of that highly leveraged product, right? To make sure that we can survive and sustain consistent losses and max drawdown events, which every single strategy has, right? If you're lucky, you have a system or a regiment like we do with the daily profile that tells you this is the market environment, this is the volatility conditions, these are the type of models that will be most likely successful, right? But layer 2 is like really understanding what risk profile will work with the measured move that came from layer 1, right? And then layer 3, right, which is what we're currently working on to make it easier, and this will be definitely free once we're completed, right, is we all like to trade prop accounts, right? So I want to come over here and be able to select any prop account and have the rule sets, right? And I want to see every single possible equity curve based off of that risk profile, based off that rule set, right? Because layer 3 is like their rules add another layer of complexity to your trading. So not only do you have a market that can move 25,000 possible scenarios in a highly leveraged that you have to account for, so you have to build the risk profile and what model is the most likely to sustain, but you also have to account for rules from the prop account and what risk profile works, because what is happening is you take every type of equity curve, which represents every type of trader: scalpers, trend traders, reverse traders, reversion traders, range traders, cash flow traders, ICT based traders, market profile style traders, right? It doesn't matter the name of your strategy, you have an equity curve attached to you, right? Those rule sets, you want to build your risk profile off of those prop account rule sets that are going to be the most successful based off the rules. So that's the 3 layers that you have to account for, right? And in phase 2, we do it every single hour. So like, for example, right, this is 10 o'clock, 11 o'clock, 13, 14, and 1500 hour. And what we did was we dropped 12 different trading strategies, just the risk profiles that were successful, and said, hey, what is the most, if I just traded just that hour, right? What is the highest probability of all these green candle, red candle, 5-minute, 15, 30-minute trade strategies that had positive expected value? What is the highest probable risk profile that you can have, right? And we can see that based off of the hour, right? 0.22 to 0.25 basis points for the stop, and 0.5 all the way up to 0.15 for the TP, right? With these type of win rates, right? And these types of profit factors and these types of EVs, right? So, right, so we teach you in phase 2 with every type of strategy that you can think of. Like, number 1, like, is there just unlimited edge playing around? And what most of the people in phase 2 realize is, holy shit, there's not a lot of edge intraday at all. Just that can sustain any market environment, any volatility condition, right? And that kind of shows them the discipline of how to turn systems on and off based off of the market, environment and volatility condition, right? And then phase 3 is like the most important part is, right? We know that you are going to make trade decisions on your own, right? And in order for you to be disciplined and not go on tilt and not over position size and not strategy hop, right? We proved to you throughout the first 2 phases why that's deadly. But like, you have to build a business plan that you can be confident in. And it doesn't matter if it's what Twitter's doing that week. It doesn't matter if your friend trades that way. It's something that you can say, I will sign a contract to myself saying I will stay disciplined to this position size, this strategy, this risk profile, and this measured move. Right? Because that's how you honestly get through the compounding phase of trading. And that's how you get that consistency. But that's the boot camp. And I just fluffed about 10 minutes worth of time before the market opened. Any questions?
Mickey, I think it's time we introduce the Christmas special for the boot camp. So for all people, instead of it being $100 for 3 months, it is $1.11 for 90 days. So we tried to, we talked to the upper powers that be, and we negotiated this deal for you guys. So just know we always have your backs. 2 minutes.
All right, I'm going to be paying attention to the Russell today. I'll have NASDAQ up, but I'm not going to be trading NASDAQ. I'm dedicating the next quarter to the Russell. But because most of you guys are NASDAQ traders, I'll call the NASDAQ. Right, so we're coming up on the MAE of the 12-hour right now. Where in the world? Give me 1 second.
We got a cool little testimonial here, and shout out to Max, by the way. Max was one of the people during the boot camp that like literally every single day was posting in the chat, like whatever stage or phase we were at in the boot camp. This guy was literally just like, if it was just classifying the day, he was becoming really good at just being able to identify like the classification of the day. If it was then the daily profiler stuff, he was every single day, like wargaming or practice. Like, he was in there all the time putting in work. So shout out to him. And he said, everyone in here that still ponders joining the boot camp, let me say this: you better click the join as fast as you can, because these 3 months are an awesome experience. So appreciate you, Max.
All right, market opens in 22 seconds. All right. We know that this gray box right here is a 30th percentile reversal and the 50th percentile reversal for 7:30 to 8:30.
Guys, hold on. I was totally joking. I was totally joking. It's not $1.11 a day. If you do the math, $1.11 times 90 days, which is 3 months, is $100. I'm just a really bad comedian. All right, market's open. Let's go.
All right, selling off. All right, let's see how this actually closes though. Let's not rush it. We got a high, low, higher, high. This could be the snap based off of the close. All right, NASDAQ is closing weak. Oh, we got 30 seconds left.
We got a really good market open range so far, 0.12%.
Dude, that's amazing.
15 seconds left.
Dude, even Russell's got a good one. It's 0.10.
Jack Bravo, the link is the top left corner. If you scan that QR code, it'll take you right to it.
All right, we're gonna wait. Like, I see the snap right here, so I want to see if we get displacement to the downside at the 50 or the 75. All right, Russell's got a new high of the day in. Cool. It's not rejecting its 10 basis points. And Russell is mooning. Yay. All right, this is a very
All right, we're
strong
breaking
first
above.
5 minutes. Yeah. All right, M&Q. All right, I am going to attempt a long around the 75 to 50 here, right? If we can get some good rejection. It'll be 4 contracts, 4 micros. And then I'll cover at 10 basis points. Or cover the queen at 10 basis points, right? Which means taking half off for me. Like, Austin takes a fourth off, I take a half off right there. All right, paying attention to how this closes. Definitely aware that we are still within a 5-minute candle and that the probabilities are the downside. So, like, I don't like that close. Not going to take that at all. All right, and it looks like we might be getting our firecracker coming in, which I will put on a short.
All right, if we
There
we go. Sorry, I was muted. If we break to the downside here and close, I'll take this short.
All right.
We got 20 seconds left. Damn, what a break.
Yeah, this thing's breaking. Definitely gonna. There we go. We're false.
All right, we might get the firecracker.
We're getting the firecracker. Now we're gonna pay attention to these levels as it comes across to see if we bounce off of them, because we're still within the first 5 minutes, right?
God,
Now
didn't get
Russell's
triggered in.
All right, Russell's still long. So Russell might be the place to take your sells if it reverses. New 5-minute. We did not bounce off of the London OU. That's now accounted for.
Well, missed my limit order by literally a tick.
She's fast today.
Yeah, we're coming for the P12 mid now. We got a really good high today. I mean, this is what I said in the beginning, guys. This is a classic firecracker. It's just sometimes we get those breakouts and you can't get in.
I definitely will wait for a retracement to sell.
See how
New
we interact
5-minute
with the
can take
point
out
one.
new 5-minute can take out the low. It's bouncing off of it. So we're bouncing off this London OU, coming back near the P12 high.
Yeah, we just reject. There we go. That was a rejection off 0.1% MP12 high.
Looks like we might have to wait for the 45 entry. Unless it does a reversal on us. New 5-minute low. P12 mid hit. And same thing. Just paying attention. Are we going to get price response from here? It's the wrong time now. Now we're expecting a red 15-minute candle, right? Got plenty of. We got this Asia OU that's still hit.
Yeah, guys, just to give you an update, like this was a beautiful short. I mean, I didn't get triggered in, but that close below here was the short. Cash flow paid at 0.1%. Just tapped the P12 mid. If I were looking for any extended cash flow, I'd be honestly just out right now. I'd be targeting Asia OU at 655.75. I can't fucking get in.
Remember, it's all about maintaining your risk, right? Like that's layer 2. You can't take a trade. You can't take a trade.
Yeah.
Just because we can see the move happen. I can also see a bounce right now off the P12 mid. But just because we see the move doesn't mean like we can assume the risk, right? If you're a breakout trader who sells red candles and buys green candle, you would have to assume like quite a bit of risk on this breakout. All right. All right, let's see if we get that Asia OU because that's the higher probability one to get hit for the day, right? We know Asia OU is the extended target for the firecracker. We're not expecting new low day, right? So if you're long, this is where you want to start thinking about watching for displacement and the elephant stepping in the room between Globex Open and Asia. Between right here and this Asia OU, right, is a good area to start managing risk for longs, right? Me personally, like I'm waiting to see if we're going to bounce off of that and do a 945 reversal. Honestly, sells with a higher probability now. And we just took out the 3-hour low, took out that low. So yeah, let's see if we can dig a little bit lower to that Asia OU. Let me see what Russell's doing.
Yeah, at this point, I just got to give the 945 the time. We're just too far extended.
Yep. All right, RTY, YM, ES are all coming down now. We're still above the 930. We came to the MAE, and now, yeah, time to wait. You're either looking for longs off this P12 mid bounce, right? Or you're looking for sells. And this is, we don't, like, I'm going to wait for a retracement before considering any sell with a 945. Because the cool thing about it is I get that on every hour. I might have missed this opportunity, but that's okay because I've got 10 o'clock coming up. I got 9:45 to 10 coming up. All right, we got market open break starting to appear on the gunship.
At this point, if 945 forms on P12 mid, that'll be really good to see either a continuation or reversal, honestly.
Yeah. I hate to look for a reversal, but I also know like the probabilities of this Asia OU, and I know the probabilities of that low of the day are pretty strong.
Yeah.
ES is below, it's 930. Why I'm still in this 930. The new low looks like we're going for that Asia OU line right here. See if we can get down there. Most of your reversals for 945 can start at 940, right? Typically they happen like 940 to 945 is the close of the 15-minute, but then if it's going to reverse, 945 will dip down, like we'll get the reversal after 940, right? Put in a 15-minute close, and then we'll start do a footprint rejection off that 15-minute if it's going to do it. If you can't do that, then you get continuation, which is a higher probability move today. Is that continuation move based off of what we did here, right? This is the signature of a DWP or a range 1, a range 2, DWP or range 2 to the downside. All right. This is what I was talking about. Like this is going to be the close price that it could possibly put in for this 15-minute. And if we're going to do the 945 reversal to come back to the 930, right? We'll do a footprint rejection at 945 and then start popping, heading our way back above this 10 basis points, back above this previous hour 50 or this hour's 50. If we can't do that, then we sell for that Asia OU. The Grinch is step in the building. Do you guys watch that fight? Ah, that dude got his jaw completely shattered. All right, that's the exact signature you want to see when you look for that 945 reversal. All right, it's 945. We put the close price in, wick down, and then started barreling up. Now, is it going to get follow through, and the elephant truly going to step in the room? That's pretty. Like we can't even get out, take out previous 5-minute high. That's a sign that the elephant's not stepping in the room, and that we can still expect that Asia OU. All right, I'm short. I'm going to target Asia OU. My stops above this 945 high, 225 risk. And I'm going to get instant stopped out. All right, stopped. And it's looking like he wants to do the 945 reversal. Let's see if we can even take out 5-minute high. All right, so we're coming up on this market open break gunship move. We know that these red lines have been hit 50% of the time before going to MFE. So it might be a good area to start considering putting some risk on, because you can manage your risk from this red line to this red line, or this red line to this red line, however you choose. All right. Still can't take out previous 5-minute high. All right, we're above 10 basis points off the 930, approaching 9 o'clock's 50 right now. If sellers are going to do anything, like if we're going to come touch that Asia OU, they need to step in right now and go to it. If not, we're going back to the 930 highs. And I'll be expecting a range one day. This is going to be a DWP. We shouldn't be, probabilities, we shouldn't be breaching these levels up there. All right. At this point, right, like Missed the 945 reversal. Got stopped out of the short. AJLU still has higher probability. But we're going to see right here, right now, can we get above 9 o'clock's 50%? If we can, then the 945 reversal continues. We get back above 945. We come back up to the high of the day and go from there, right? Which it looks like that's what we're doing. All right, I'll wait for 10 o'clock. At that point, to do a 05 breakout to the upside. Yep. And 945 reversal is pretty clean.
So these are
It
one of the
goes
classic days where I missed my limit order on the short to the downside, and then I didn't get into the long on the 945 break. So
I'm telling you, it's forming up to be kind of a range one day, unless 10 o'clock steps in and starts selling. I don't think it's going to be a range one, but golly. All right. This might be just one of those days where I skip. Wait for 10 o'clock. Wait for more obvious. We're rejecting this previous 9 o'clock 50 though. Getting a valid low signature on the 5-minute, which is a sign of strength for bulls, for buyers. As we come back up to this 930 price, I'm going to be looking for rejections, or do we just take it, right? If they clear, just F your count, take it like you're kind of doing right now. That's a clean bounce off of that P12 mid though. Like this is one thing you always look for, right? Like acceptance or rejection, right? Price advertised below it, step above it, retest, step above, London no, retest, step above, P12 high, retest, and a stair step in back up to these levels. Not saying these levels mean anything, they're just the levels that we use, right? To get some context behind. And stats have proved these are some levels that I want to pay attention to see that reversal come in. So now we're just seeing, can we reject this 930 low, this 25 basis point, this 9 o'clock opening price? Or is it actually be able to step above that and continue going too? If this is true momentum going back up, right, 10 o'clock is going to show us because we'll stay above previous hour 50. We'll be able to dig into this 930. 05 will like give us a decent range to place risk around, right? If it's not, if it's just fake momentum to the upside to do a 15-minute rebalance or whatever you want to call it, right? Like we're just filling it and then we should start seeing selling at 10, which is the higher probability movement, is the sell at 10. But live price is telling us it doesn't care about the statistics of this AJOU. It does not care about the statistics of, you know, a long false price structure. Right? It doesn't care about that. It wants to go higher. So you listen. We breached this high that made this a long false. Then statistics tell us expect a range one day, and just to make out with this 930 price, and then we'll trade that way. We know that this is not DWP price action now because we shouldn't be back at the 930, right? So this is more range one or DMP price signature, DMP to the upside. All right, we're rejecting this 930 low quite a bit. All right, now can we get some kind of acceptance in this 930 price? What I'm looking for. Can we stay above this hour's 50%? Can we get into this 930 price for longs to burst out the top? Or is this low going to reject and we're going to come down and touch this AJOU? All right, 10 o'clock. First step, we got to get below previous hour 50. Stay out of the 9:30. All right, there we go. We want to go higher. So now we're above 9 o'clock price. We took it. We know probabilities now shifted to this 9 o'clock's high, right? Still can't dig into that 9:30 price. All right, I'm gonna let the 05 box develop. All right, now we're below the 50. So
See if we form this 10 o'clock continuate. I mean, if 10 o'clock takes 9 low, then I think maybe that was
yeah,
just a reload, you know?
yep. Still waiting to see. All right, remember we still have this HOU that has probability of getting hit. We're
Okay, so
rejecting the 930 right there.
we're getting bearish distribution. My first
Now the 05 box is 0.17. Telling you, this is looking like a range one day. We just need to break that high first before I call it. Cool thing about being your own style trader is you don't have to put risk on until you're ready to put risk on, until the exact condition that you're looking for is met. And so right now I'm still trying to distinguish if this is going to be a range one day and I should trade it as a range day, or if this is going to get directional like we're supposed to and come down and touch the Asia OU. But for now, like I'm just going to sit on my hands and not do anything and be okay with it. One thing that we know to be true is we're still below 930, right? One thing we know to be true is we're still below 9 o'clock's 50, right? We still have probabilities of the upside. We had high reversal areas above us, right? So now we're just trying to see, because the thing that you have to solve is are you in the body of the wick of the candle, right? We know that this is a high likely high of the day, right? We know that there's high likely that it's going to be a green candle, but then you have to determine how big of a candle it's going to be, right? And that's what knowing the market environment, is this a range one or a DWP, is important to understand. Like taking that tactical pause to figure it out. It's huge. All right, new 5-minute candle coming up. We got a small little O5 swipe. We're bouncing off the London OU again. So we're stuck in this 930 low to this London OU level, right? Bouncing off the P12 high, or rejecting the P12 high. All right, there's your O5 breakout. Can we get 10 basis points? So right now we have all the steps but 2 for 4-step reversal to sell to the downside. Nope, sucking back in the range.
Can you hear me now?
Yes.
No. Okay. I was trying to see if I can share my screen on mobile. I don't think I can. I don't think Restream has mobile share. I don't know. I was trying to share it either way. I took the short when we rejected the market open. I paid myself when we hit 945. I got my final target is just if we literally come back down and hit at 685.25. Stop loss is 75% of 930 at 778.25. And that's the trade.
Nice.
I just can't share my screen, so I don't know.
We've got all of 2026 to trade.
Yeah.
I mean, who cares?
Yeah, because at this point, the reason I'm putting that 685 is, like you said, we don't have a lot of distribution. I don't think. Like, I mean, we just have a really good low
Yeah.
of day. I really don't like trading against 1800 low of days, even if
No.
we can take them. So I shorted at 742. I got slipped really bad. I was trying to short that once we got a closure back below 930, and it slipped me like 3 points when I tried marketing in, and then when we got down to 708, right when we took the 945 range, that's when I paid myself the cash flow. And now that we have that high at 10 o'clock, just thinking if then, right? So if now that could be a Q1 high setting up, we still have the rest of Q1 forming, but if this is a bearish 10 o'clock hourly candle, then I'm expecting the 9 o'clock low to be taken, which is why I'm putting my TP at 685.25. And so I'm saying, okay, well, if that 9 o'clock low could be taken, there's still a degree of variance. There's still a degree of me being wrong. So that's why I put it a little bit above the low. And then we have a really strong high of day at 931. Even though it's a holiday or 1800 low a day, anything, I got to respect what live price is saying, and live price is accepting below RTH open. And when live price is accepting below RTH open with all stats below, adjust my targets accordingly. So
Yeah.
if we do pull back into 930, like I said, my stop loss is 778.25, and then my final exit is 685.25, and that's the trade. Wasn't able to take the 930 trade, just literally did not trigger me in. Missed the 945 break to the upside. That was actually a really beautiful long. It took like hardly any drawdown.
Yeah.
Come on, baby. Yeah, I think we're solid. I think we're forming a
Yeah,
really good bearish hourly candle here.
absolutely. We'll see. Like right now, we've got Asia OU that just pulling us down. We just
There we go.
approached
TP
10
hit.
basis points. Nice, good job.
All right. Well, that's it for me, guys.
Yeah. I think we could probably end it right now. Like I still think this is a range 1, right? I'm want to see what price does around this Asia OU, right? And if I miss the day, take a 225 loss for the day, I'm okay with that. So yeah, let's just cut it because like I got nothing. I'm not really feeling trading. I got a lot of stuff to do anyway. And I missed this whole sell. I missed this 930. I missed all of it, and I'm not going to chase now. So I'm okay.
Got all year, baby. Are we?
Yeah.
Is this your last day of the year? Or are you trading
Yeah.
tomorrow?
No, I'm not trading. Like I got family coming in this afternoon, so like I'm done for the year.
Same here. That was my last trade of 2020. I thought honestly, I wanted to end it on a high note, but dude, today was looking so beautiful with that firecracker. I wanted to take a shot at it.
Yeah, you got to. It's pretty freaking obvious. Like this right here, right? But I also know I've seen hundreds and the higher probability, right, was they sell to this Asia OU. I've seen plenty of times where it's like, and since this was outside of my time window, right? Because I don't like taking this sell right here at 10 o'clock. I like taking it at 9:30, right? It was just I just didn't want to press the button, and that's okay, right? Because I cannot. I mean, that's not part of my repeatable workflow. I see it discretionary all day long, but I haven't been profitable as long as I've been because I've taken all these discretionary trades, right? If I don't have a model set up with it, I have a 945 reversal model, but like that went against everything that we did today, right? That's for if I'm trying to get a false, right? We already had the false, so like that didn't work out for me. This didn't work out for me, and then like I'm okay with that. Take my 225, move on, bouncing off the 10 basis points right there. Good trade though, man.
Thanks, man. All right, guys. Well, so you said you wanted to end it because I'm
Yeah, I'm
that was
good.
it. That was
Yeah.
a clean for all the drawdown police out there. That took like 3 points of drawdown. All right. I'm sorry. I wish I could take only 2. All right, guys. Hope y'all have a great rest of your day, year, Christmas, Happy New Year's, all that cool stuff. As always, stay grinding on your freaking goals and never, ever, 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 ever let anyone tell you that you can't do something they've never done themselves. I'll see y'all later. Bye, everybody.
Later. How do you end this thing?